So, some of the most successful investors in the world, and in particular the United States, are sitting on the sidelines flush with cash. What is it that they know that we need to be paying attention to? Well, the reality of it is, it's simple. It's not time to invest. And we're going to talk about why and when it may be time in this video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrower capacity, proper use of life insurance, and acquisition and ownership of real estate. I want you guys to like the video, subscribe to the channel, so I can help you continue to craft your personal blueprint for prosperity. So, most successful investors in the United States in particular, Warren Buffett and many others, are sitting on the sidelines with tons of cash. And many of you may be wondering, well, I've heard rumors that when the market's down, it's time to buy, right? Buy on the dip. Well, the reality of the situation is, what it is that these investors understand is that the effects of the economy around us, the effects of the Federal Reserve's response to the economy around us, and the effects of the Federal Reserve's policies have not been felt yet in the asset markets. So what does that mean in plain English? Basically, the economy around us has shifted drastically in the last 2 to 3 years. We've seen COVID lockdowns leading to the Federal Reserve and the government stimulating the economy, to a massive pivot around tightening in the economy due to inflation. The Federal Reserve has raised rates 7 consecutive times this calendar year of 2022. And by the time you're watching this video, they could have raised it even more. This is the most rapid rate hike that we've seen in decades, if potentially ever. The effects in the economy of the Federal Reserve's rate hikes have not been felt yet. The stock market reacts extremely fast to these policies and changes, but it doesn't mean that the full effect of what is going on in the economy and what the Federal Reserve's policies are have rung out through the stock market. Real estate has a serious lag to these effects, many months before you start to see this really take shape in the real estate market. And many other markets are also sensitive, but take time to absorb the policies by the Federal Reserve and the government. Many wealthy and smart investors know this. This is not the time to invest. If you're already invested, a healthy strategy may be to dollar cost average. But for many of you that are sitting on the sidelines, that don't have significant investments going, that may have cash or may be planning to invest and trying to find the right time, some indicators of when it may be a good time to invest are going to be when we start to see economic factors domestically in the US or abroad that could affect the Federal Reserve's policies and create a pivot. The Federal Reserve has made it abundantly clear that inflation is their number one objective, and that they will continue to raise rates until inflation is under control. Under control for the Federal Reserve is a 2% inflation rate, a core inflation rate. We've gotten up to 9+%. We're currently at about a little over 7%. If you start to see inflation decrease significantly at a rapid pace in the coming 6 to 12 months, this could be a major indicator that the Federal Reserve is going to take their foot off the gas in raising rates. They've already indicated that they plan to flatten rates at some point in the first or second quarter of 2023. At this point in time, they are waiting to see what the effects of the rate hikes will be in the economy. If inflation starts to take a precipitous drop, then the Federal Reserve could pause or even pivot. Or there could be economic factors domestically or abroad that forces the Fed to pivot before they can continue their fight against inflation. If and when this happens, if the Federal Reserve, for whatever reasons, is forced to reinflate the economy, to loosen the monetary supply or lower interest rates, this is going to be the time to get into assets. You have to pay attention to quality media sources, quality news sources, and follow the Federal Reserve in particular. When you see the Federal Reserve start to speak in what's called a more dovish tone, which is basically to say that they're more concerned about the health of the economy and stimulating the economy than a hawkish tone, in which they are more concerned about economic factors like inflation, where they plan on tightening the money supply, this is when you need to be prepared to pivot. So, to recap on this, it is not a good time to invest if you're not already invested. You need to be paying attention to as much economic news, particularly the Federal Reserve's decision making, in order to make the determination when it is time. If you can pay attention to this and pay attention to the Federal Reserve's verbiage and tones and their policies, you could potentially save yourself significant losses and make tremendous upsides. Thank y'all for tuning in. I enjoy bringing this content to you. I want you to like the video, subscribe to the channel. I'm dropping more content on a daily basis. Stay focused, stay in motion. I'll see y'all soon.